Hey, what's going on, guys? Bennie Childs, founder of the Teach Me to Fish FX trading community, and I'm back with another weekly Forex forecast market analysis. All right, and so in this video, I am going to give you guys my breakdown of the Forex market. All right, so starting out with the dollar index, we have an institutional bias of longing this pair. All right, if we zoom all the way out here, we can see that we have been on an uptrend here based on the 4-hour market structure. All right. Um, we have our most recent low here. All right, this high has been taken out by this high. All right, so we are on an uptrend. We have a lower low. All right, we currently have a lower high, but as of right now, we're on an uptrend. All right, so from there, what I want to do is take a look at reasons to see this market head to the upside. Okay. And I like to do that by taking a look at imbalance and rally based supply and demand zones. Okay. All right. So first thing up, let's take a look at the imbalance on the downside as far as the 4-hour demand zones that we can possibly see price retrace back down to and push up. Okay. So first up, I immediately see imbalance here. I'm going to change this over to my purple imbalance color. All right. I immediately see imbalance here. Okay. Where else do we see imbalance? We see imbalance here, which 50% has been filled. Taking a look over here, we do see imbalance here in this institutional demand zone. This imbalance has been filled. We do have imbalance here, but I like to take a look at the more extreme imbalances, and furthermore, this imbalance has been completely filled here. So I'm going to delete that. Okay. So now we can see where price may want to come back to fill in these gaps. Now let's take a look at our rally base demand zones. Okay, so we do have a drop base rally demand zone right sitting right here. And I tell you what, I will use this. Okay. So we do have demand sitting right there that has not been touched. This demand has been touched. We do have a demand zone right here that has not been touched as well. We also have demand here that has not been touched. The next thing I'm going to look for is Fibonacci confluence. All right, so I'm just going to come here and I'm just selecting my most recent lowest of low and most recent highest of high. Go over to fib trading, and we're going to change these colors over to white just so we can make out our entry areas. And I tell you what, 2, 3, let's save as 1, 2, 3, 4 fib trading. All right, awesome. Now, you guys, if you don't know, based on past videos, I really like the 78.6 and the 61.8% retracement levels to look for entries. I don't have anything below 50%, okay, because I want to look at discounts. When we're in the store, yes, if we find a 10% discount, a 20% discount, yes, we're going to jump all over that. But when it comes to investing, true discount doesn't start until 50%, and the most premium discount levels are the 61.8% and 78%. So let's take a look. Let's see what we have. We have imbalance at the 61.8% that still needs to be filled. All right. And we have a 4-hour demand zone. All right. Sitting below that, where the 78.6%, all right, is sitting. Okay. Now, we do have this demand zone right here, but it's very close to the 100%. So I would be less likely to be interested in this zone per se. So the zones that I would be looking for would be this zone right here. Okay, so we can possibly take a look at jumping in on the 50% of this zone, and I'm just going to, what do I want to use? Just for right now, I'm going to use this imbalance just so I can mark the 50%. So I would be looking for possible buy entries here. Okay. Okay, with my stop just below this low. Okay. Okay. And based on market structure, okay, we could aim for this high. All right. Now, another thing, what I want to do is take a look at imbalance on the sell side, if you will. All right. So I see imbalance here. Okay. I see imbalance here. Okay, that has not been filled. So I would aim, I mean, technically I would shoot for the 100%, the 100% retracement on the Fibonacci. All right. However, I'll be looking for partial profit at the filling of where is it? There we go. I'll be looking for partial profit at the filling of these imbalances, as well as this high. Okay. All right, let's take a look and see what else we may have here. You can look at partial profit here. Okay. We can look for partial profit. We do have some imbalance up here that I'm noticing. We can grab partial profit here. Okay. And I'm looking at some more imbalance over here. Okay, so we can take partial profit there. Okay, which is going to be past our 100%, if I'm not mistaken. Yeah, just a little past it. All right, so the Dixie, all right, institutional wise, and if you're part of the mentorship community, you guys know how we take a look at our institutional bias. All right, the Dixie, the institutional bias is up. So I just showed you guys reasons as to why I think I would want to take, my trade here. So this is a 20R trade. So risking 24 pips to gain, risking 24 pips to gain 74. All right, let me make sure. Sorry. To gain 490, excuse me. All right. Let's do this. All right, so it's very possible. Now we have to, give me 1 second, let me do this. Inputs. I don't think that helped me. All right. So now we have to take into consideration, guys, the institutional demands, supply zones that we're going to have to push through. All right. So not to say that this market is going to just shoot up like this. However, currently we have a bullish bias on the dollar index. We have areas, relatively close areas in the market where we can see the dollar index based on the 4-hour pull back, find support, and push up. We have a lot of work to do, again, but based off of the information that we have, we could possibly see this playing out for us. Okay. Now, of course, you want to wait for confirmation. Okay. You have to wait for confirmation. So this may not be a 100% accurate entry. Okay. Entry could possibly be, somewhere up here based, if you wait for confirmation. All right. If you jump down to a lower time frame and wait for confirmation, it may be a little lower. All right. But this is just a general idea, guys. So the bias is long on Dixie. The institutional bias is long on Dixie. 4-hour market structure gives us insight that this market is going up. All right. And we have our reasons as to why we would want to jump in and follow this market up. So let's go ahead and move on to the Australian dollar. All right, Australian dollar institutional bias is bearish. We are sitting in institutional supply here. Zoom all the way out and take a look at the market structure. Let's take a look at this most recent leg. All right, we are on a downtrend. We have here. Let me take the magnet off. We have our high to low, lower high. I'm just going to do the major ones: lower low, lower high, lower low, lower high, lower low. Okay, this low was taken out, all right, by this low. Okay, so we are still in bearish structure on the Aussie dollar. Okay, this could be our lower high right here. I'm gonna throw the magnet back on. Let's take a look at the Fibonacci. me bring it down to the low here, and I tell you what, guys, let me just make sure. Don't worry, we'll get this changed here in just a second. Okay. Fib trading. Okay, let's see. So we came down and we did push back up into the 78%, 78.6% retracement area, which was brought us back into this institutional supply zone. So now let's see if we can find reason for this area to go down, or this pair to go down. Let's see. So, all right, guys, I like to look for imbalance. Okay. That imbalance was filled. That imbalance was filled. So we have imbalance that needs to be filled here on the upside. All right. We do have a rally base drop right here. So let's just grab that, make that supply. Okay. So the market needs to fill this imbalance. All right. We do have a supply zone, 4-hour supply zone that has not been mitigated yet. All right. So we could see this market fill this imbalance, tap into this supply. We would love to see it tap into the 50% and push down. Let's do it like this. Okay. Yeah, it would be great to see it tap into the 50% and push down. There's my short position tool. Let's see, and maybe, just above this high right here. Okay, guys, make sure you're accounting for spread. Now let's see if we can find reason to go down. So if we were just doing the strictly Fibonacci trading, then yes, ultimately we would target the 100% extension of the move, and from there we can take a look at some market insight, okay, for partial profit. So we have a low here we can take for partial profit, this low, okay, this low, all right, this low, okay, the filling of this imbalance, okay, the filling of this imbalance, okay, we can go for this low. Okay, now these are all areas where we can secure, you can secure profits, or bring your stop to to these areas. We can take a look over here. Let's see our last imbalance. Let's see if we can find imbalance and partial take profits over here as well. Okay, so we can aim for that low. Where else? We can aim for this low. All right, I don't know if you guys wanted to actually stop by and find this in depth of an analysis and outlook or forecast, but you got it. We have imbalance here, and I just think I am helping somebody. The light bulb is going off for somebody right now. All right, so we can shoot for partial profit there. We still haven't reached to our 100%. We can go there. We can shoot for partial profit here. Okay. All right, I see imbalance that is still open here. Now, who's to say that it's going to go down this far? No one, but this will be a heck of a swing trade. Am I right? Okay, so we have imbalance here that I'm noticing. Okay, still not quite at the 100% mark. We can take a look at let me use a couple of different lows, but partial profit there, partial profit there. All right, so there you have it, guys. This is the analysis for the Australian dollar. All right, so again, our institutional bias is bearish here. We are sitting in institutional supply. Okay, right here. We've taken a look at this 4-hour demand that has not been mitigated. We also have imbalance to the upside that again can be a magnet for the market to push up and then find supply or find support within this supply area here and start to push down. Okay, so that is the Australian dollar. All right, let's go ahead and go over to the pound USD. And guys, if you're liking what you see so far, please feel free to hit that like button and subscribe if you're not a subscriber. All right, so institutional bias is consolidation here on the pound USD pair. We do see within this past week where we've kind of bounced off of institutional demand and supply and tap even further into the supply. All right, if we take a look at the most recent leg, we can see that the market, okay, if we let's come here. All right, so we have a high, we have, take this off, we have our low, okay, we have another high, all right, which barely took out this high, but it took it out. All right, so that's an uptrend. Okay, this possible start of an uptrend. All right, we would need another high for it to be considered an uptrend. Did we get another high? Let's see. We've got this low, we have this high. We didn't get another high, guys, so we got this lower low. We have a lower high that did not take out this high. All right, we have this low that didn't take out this low. All right, we have a lower high, lower low, lower high, lower low, lower high, lower low. Now watch this, higher high, higher low. Okay, excuse me, a lower high, higher low, a higher high, a higher low. All right, you may not want to, oops, we may not want to count that, but we're going to count that. All right, so now we have a higher high here. All right, so we have one higher high, two higher highs, but what do we have here? This low has been taken out by this low. All right, so yeah, I see that. Where do I want to start? We got this low, high, higher low, higher high, higher low, higher high, lower low. Okay. Let's go with this high, lower high, higher low. All right. So, and oops. Let's just grab this and say we've got this higher high, okay, or lower high. All right. So technically, guys, we are in a consolidating market. All right. We are in a consolidating market. All right. So this low was taken out by this low. Then we have a lower high than this high. All right. So, I mean, technically, again, we can see where we were in a downtrend, but we have already started consolidating. All right. So we're pretty much in between this high. Let's go. Yeah, we'll do that. And this low. So this market is in a consolidation. However, we can still take trades, right? Because we are supply and demand traders. Okay. So let's take a look. Let's see what do we have here. All right. So we're inside of institutional supply. Okay. Or we're coming out of institutional supply. Okay. Let's look for reasons for where we want to see this market go. So we have imbalance there. Do we have any other imbalance? I'm going to go ahead and get rid of this line, guys. We do have some up here. I mean, it's very shallow, but nonetheless, imbalance. I mean, we still have just a little bit here. I promise you, the institutions, they don't need a lot. Okay. All right. So let's take a look at the downside. We have imbalance here. Okay. We have imbalance here. All right. Let's get rid of this. We're consolidating. Okay, now let's take a look at some 4-hour zones here. Was that taken out? It barely looks like it was taken out. So, but let's grab this 4-hour. Let's use our channel tool here. This is 4-hour. Okay. It's been tapped into, so this is not unmitigated. All right. But we do have nice 4-hour unmitigated supply right here. All right. Let me get rid of this one. Let's see. We do have an You know what? I was thinking maybe I should do this live, but okay. And let's see, we had imbalance up here. Have a supply up here, but it's been mitigated, so we won't go with that one. All right, so let's take a look at our most recent highest of high down to our most recent lowest of low. Okay, and throw this on there. All right, so we have, what do we have here, guys? We have our 78%. All right, 78.6% sitting in the middle of imbalance just before a unmitigated 4-hour supply. All right, and then we have this 4-hour supply here. I know sometimes with dojis, you want to take that, just use the whole thing as a zone. And if we do that, we can possibly see this being filled. So again, I like that 78% entry. So I mean, it's a couple of areas we can take a look at, but I am going to shoot for 50% of this zone. Okay, just put stopwatch just above it. All right, and again, with the fib, you technically can aim for that 100% retracement. Okay, but again, we want to look at market structure for our take profits as well as partials. So currently, this is a low here, so I am going to take that as a possible partial. I'll take this as a possible partial, the filling of this gap as a possible partial here. Of course, the zero, which is TP1 typically for me. We've got that. We can shoot for that. Let's see what else we have over here, guys. I'll tell you what, where do we stop at? We stopped at, okay, one spot 32,194. Okay. Partial. Okay, this will be a partial because this is a gap fill. Okay, and of course 100% is right there. So let's slide back over here. Okay, so this is a possible entry. Now we could possibly take an entry up here. However, if we do get a close above this high, then we may want to be looking for buys, or excuse me, yes, we want to look for buys on on that on pound USD. Just taking a look at the downside, maybe I'm trying to see if there are any possible demand zones that may cause this market to go up. The ones that I'm looking at have been mitigated, except for that one's been mitigated as well. That one's been mitigated. These have all been mitigated. And I think if this market is going to go up, then it probably would start with based on the 4 hour. If it follows the 4 hour market structure, I would say I would be looking for this area right here. Oh, I'm sorry, guys. I need to use the channel Thule. Okay, I would say there. That's been mitigated. All right, I would say possibly down here. So our second possibility that I would look at would, I'll put it on this side, would go here. Okay. Maybe stop loss just on the outside of this gap fill. Okay. And we would have to wait for price action to be filled in here, or structure to be created to see exactly where. But as of right now, I would probably aim for this high as of right now. All right, I'll probably aim for this high as far as looking for buys. So the overall institutional bias for pound USD is consolidation. Again, however, guys, because we are supply and demand traders, we can still function in a consolidating market. For even more opportunities, yes, we could drop down to the lower time frame, but I really do like trading off of the 4 hour. I think that's a good happy medium for those of us who have jobs and businesses to run. So, all right, so that's that. Take a screenshot, guys, or come back and watch the video. All right, so USD CAD. I know this is long, but I'm sure I'm helping somebody. All right, USD CAD, overall bias, institutional bias is uptrend. Okay, let's take a look at price action. All right, yes, we do see we have been on a downtrend here. Okay, our highest of high was taken out here. So let's go ahead and follow this market out. So we have, I'm gonna take this off. We have our low, high, higher low, higher high, higher low, higher high, equal low, higher high, higher low, lower high, lower low. Okay. All right. Now, in order for this to go in a reversal for a downtrend, then we would need another lower low, which we don't get. I'll just take it all the way up here. There is our higher high. Okay, taking out these highs. Now we need a higher low, and then we have a lower high, lower low, high, higher low, consolidation right here. All right, so institutional bias is an uptrend. However, based off of the 4-hour market structure, we are ranging in between this low and this high. All right, so we're pretty much consolidating. All right, price tapped into this institutional supply, actually wicked through it, so it did not really respect it. Let's see. We've had, yeah, it's kind of bouncing in between here. So let's look for places to where we can take trades at off of USD CAD. Okay. This has been disrespected. So this has been respected. This one has been disrespected. But this one down here has been respected. I'm thinking that we are gonna go higher. Let's take a look at some areas of interest for us, if you will. Imbalance. I don't see imbalance there. Okay. Imbalance. Okay. Let's see. And let's take a look at this rally base zone here. This one has not been mitigated. Okay. Let's take a look here. This has not been mitigated, and it should be demand. Okay. Let's take our lows of lows up to our highs of highs. Throw a fib on here. Okay. Let's see what we have. Let's see. We have a 4-hour demand at 61.8%. We have. I thought I had another 4-hour demand. Oh, it's up there. Okay, so. And oops, I don't know how I missed this, but we do have. Demand sitting right here at 78.6. So you guys know I love the 78.6. So I'm gonna go there. We have imbalance down here. Before I do that, let's mark these out. Okay. So we have 4-hour demand with imbalance, 4-hour demand with the imbalance sitting above it. We're at the 78.6% right here. I mean, we could come all the way back and get a triple bottom type deal. Into this institutional demand zone right here. So we have several areas where we could possibly take trades from. But of course, you want to wait on confluence. But just for the sake of the video and for consistency's sake, we will put a buy order here, okay, and go just beyond there, okay, and initially, gonna aim for that high, which is at the 0%, which still gives us a 10x trade. Let's just say that. Because we're currently consolidating, but the institutional bias is up, so our overall aim is the 100%. Okay. I'm sorry, guys. I did not intend for this video to be this in-depth and this long. However, I think it is helping someone else. All right, institutional bias is up. I'm gonna go with this entry here, and let's take a look at some partial profits. Partial profits more than likely would be the high. So of course the 0% retracement or extension rather. You can't have a 0% extension. I'm sorry, but this would be TP1. Of course, this is TP2, but I would probably be looking to take partial profits there. Partials at that high. Partials at that high. Partials at this imbalance field. Okay. Partials here. Okay. Of course, you're going to take partials at that 61.8%. Let's see, where else can we take partials at? Okay. See, we got a partial here. And a partial there. Partial at 61.8. I would say partial at that high. Partial at that high, and I think partial there, partial there, and then possibly what? Yeah, and then the one, then we're pretty much done with that Fibonacci retracement. So. Institutional bias, USD CAD, we are looking for longs, okay? Excuse me. And if we get a break below here, then we want to look for shorts. All right. So that's the USD CAD. All right. Euro USD. And again, guys, if this is helping you, if you like this, please like the video. Subscribe if you're not a subscriber. All right. Institutional bias is consolidation. Okay, we can already see that it had been consolidating for a little while. The most recent leg is a downtrend. Let's grab this. So take this off. We've had our high, low, lower high, lower low, lower high, lower low, lower high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, higher high, higher low, higher high, higher low, lower high, lower 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 low, higher high, right? But lower low, higher high, excuse me, lower high. All right, let's just say lower low or high. Yes, I see this high, but overall we went down. Okay, higher low, higher high, lower low, lower high, lower low, lower high, and then of course we finished out there. All right, so let's see if this pair is consolidating currently. Okay, so here's price. All right, so here's a low, there's a low. All right, but we have a low here. Okay, and we have here, let's do this. We have this low here. All right, we have this low right here. All right, we have this high, and we have this high. Okay, the market did not break this high or this high. All right, so we would consider this to still be in a downtrend. Of course, we have that low there. That's very ugly, isn't it, guys? So low, 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 high, high, broke that low. So I'm looking to take this to the short side. Okay. All right, I'm going to be looking for shorts. Okay. Excuse me. So we do have imbalance here, along with a mitigated 4-hour supply. Okay. I really don't see any unmitigated supplies. We are bouncing off an institutional demand. However, we do have a imbalance, 4-hour imbalance there. Really no unmitigated 4-hour demands like that are pretty much close, but we do have unmitigated supply. So I would be looking for that. Let's grab our Fibonacci for a little bit of a confluence. All right, most recent highest high to most recent lowest of low. Go ahead and throw that on there. All right, so we are 78%, 78.6% is all the way up here. However, it is sitting in a 4-hour supply zone, right? But that supply zone has been mitigated. Could there be more orders up there? It's very possible. Here, let's drop down to the 1 hour. Let's see. I mean, we could. I mean, technically, we do have imbalance there with a 1 hour supply. All right, so technically, yes. I could possibly see it come here. All right, so that's a 1 hour demand zone that hasn't been mitigated. This one has been mitigated. But as far as stops, I would have to put my stop here, all right, above the 4 hour zone, and possibly see it play out to come down and test this institutional demand zone. And based on our structure, again, I would be looking for shorts. 4 hour 50% is right there, right at the 78.6%. We just gonna have to roll with it, guys. Let's see, where could we take partials? All right, for right now, partial there. Of course, at the 0%. Okay, could possibly take a partial there. Could possibly take partials there. And of course, at the negative 27% retracement, we can possibly take partials at the filling of this gap. Of course, partials at 61.8. We can take partials here. Let's see, what do we have before we get to sorry about that, guys. Before we get to the 100, let's see. I've already taken a partial there. And we do have this gap fill. 100% will stop us out for that trade, which is it still won't be a bad trade. You're talking I'm sorry, guys, my phone is just ringing like crazy. You're talking 13x trade, so it's not bad. Risking 30 pips to gain 402 Euro USD, which is not bad. It can still Sorry. It can still play out as a consolidation, just kind of widening the consolidation. But that's the possible trade that I'll be looking for Euro USD. Okay. All right, guys. USD JPY. We have our institutional bias as being bullish. All right, so we want to look for longs here. Let's take a look at the market structure. All right, see this most recent leg. We have our low, we have our high, we have our higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. Okay. Now, in order for this to turn around to the downside, we would need another lower low. Let's see if we get it. We've got a lower high, and we have a higher low. So just kind of consolidating here. Now we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, lower high, lower low. Okay. There's a lot of back and forth. USD JPY in this area, but we damn well we break above. Now we're going higher. Bam, bam, bam. Okay, no. And we are going higher, but now, oops. All right, guys, you saw that. I'm not even about to do that. All right, so taking a look at the structure, and I was really just kind of doing that for you guys, but taking a look at the structure here, this high was not taken out. We're kind of consolidating right now, and we're coming out of this supply area here, institutional supply area. So let's see, we want to be looking for buys or reasons to buy this market until we get to we've had, let's see, we've had this low and we've had this low. Okay. So where can we see this market turn around at? We have imbalance. Very, very small imbalance there. We do have imbalance here sitting in institutional supply. We do have an unmitigated we've had imbalance in the institutional demand. We have an unmitigated 4-hour demand. Okay. All right, so we could see that being filled and then pushed up from there. We do have this demand here that has been unmitigated as well. Okay. All right, so let's grab our most recent lowest of low to the most recent highs of high. Okay. Let's see, 78.6% is sitting inside of imbalance here. This is not a very strong demand area. However, it is sitting like right on the 50% of this 4-hour demand is sitting on the 50% of this institutional demand zone. So that's a pretty positive confluence of me, and plus it's down past the 78%. Really not that close to the 100%. So I would probably take this on here. And of course, guys, we're doing this knowing that we're going to wait for confluence. And if you guys want, if you're going to, just trade the fib all the way out, we can shoot for the 100% retracement. Okay. And where can we possibly take partial profits at? All right. Now, when this gets filled in, there will probably be more areas that we want to take partial profits in, but I would say that could be partial profit. That high, this high. All right. This is called securing the bag, guys. All right. Partial profit there. Let's see if we can find some structural areas for our partial profits. Okay. Of course, at the 27. We'll go here. Partial profit here, and of course here, which would be close to, that's a high, so partial profit there. Okay, and where's the 100%? Probably at the filling of this gap. Right here. Okay. Should be here. I know you guys were. How did you see that? I just saw it. I just saw it. I really can't explain it. It was just there. All right. And then bam. All right. So now we're talking. What is this trade? We're talking 40x. All right. We're talking 40x. 40x. 40x trade. Okay. Basically risking 13 pips for 535 pips. All right. So that is USD JPY. All right. And of course, watch out for the news. Okay. Could possibly push this pair down, push it up. All right, could possibly come down and push up, but that's where I'm going to be looking to take, or this is where you can be looking to take buys at, of course, with confluence. All right, let's take a look at the USD Swiss. The institutional bias is long. We are sitting on institutional demand. It's been pretty choppy, but we are heading up with this pair. Take that off. So we have a low here, that this. Gosh, I wish I could do a straight line. We got a low here. This low here was not taken out. This high was taken out. we have a lower, a higher low here. So I do see where this market is on the uptrend, and even if we grab our channel tool, we should be able to see that we are in fact on an uptrend. If I can get this to work for me, with this being so small. Okay. Even if we grab the channel tool and did that, we can see that we're on an uptrend. Okay. So let's look for reasons as to why we will want to buy this market along with the institutions. Okay. Small, but yet imbalance. That's been mitigated. That's been mitigated. That's been mitigated. So that has not been mitigated, and it's sitting on the 50%. So I am going to say, because this has not been mitigated, guys, and is sitting on the 50% of our institutional. Yeah, no. Because it's sitting on the 50% of our institutional demand zone, we're going to look for longs in this area. Okay. And if we take our most recent lowest of low, shoot that up to the most recent highs of high, okay. 78.6% is sitting at the imbalance field. Okay, so we very well could just come there, but and this is very close to the 100% here. YOLO. So maybe look for this. All right. And guys, when you look at this, this could be weeks and days of holding a trade, but well worth it. You're talking about a 38x, you know, a 38x trade. So let's take a look at where we could take partials at. Possibly take a partial there. Partial at this high. Partial at this high. Partial at that high. Of course, partial at the 0%. We've got this imbalance where we can take partials at that fill, okay, even partials at that high. And again, guys, you just want to secure some profits. All right, that's all you want to do is secure some profits. Okay, you could take a partial here. Okay, a partial, of course, at 27%, but there's also imbalance fill that we could take partials at. Okay, Partials at this high. I hope you guys are enjoying this free market analysis as much as I am. Of course, partials at 61.8. Partials at this high. All right, I do see a gap. So possibly at this gap fill, partial, where are we at? All right, still not at 100%. Partial, gap fill, partial. Partial at that high. 100% is there, but we do have this gap fill that we can take partials at. Okay. All right. So that's USD Swiss. All right. And this is, of course, if the institutional bias, the short-term institutional bias is correct. I think I'm going to go ahead and release a video on exactly how it is that I find the short-term institutional bias. Okay. All right. So USD Swiss. All right. Let's take a look at the USD peso, or the US dollar versus the Mexican peso. Give me 1 second, guys. All right. Let's see. All right. So consolidation is the institutional bias. We take a look at that most recent leg. It has been in a downtrend, but we can see where it's been going sideways and then pushing up here. We've had a low here, low here, low here. This high was taken out. We had a lower high. All right, higher low, lower low. This may be our low, but that broke. So I'm going to be looking for sales initially on this pair, even though the institutional bias is consolidation. So I'm looking at this gap. Okay. Unmitigated supply. All right, unmitigated supply. All right, with this gap. Excuse me. So we could be looking for sells here, or somewhere in this area. Stops just above here. Okay. Initial target there. All right, that may work out better. But let's take our fib for a little bit of fib trading. Most recent highs of high down to the most recent lowest of low. Since we're looking for shorts, come up the fib trading. Okay. We're not even in a discount. Oh my goodness. Ooh, this consolidation is gonna be something. All right, 78.6% is up here. Now, if we drop down to the lower time frame, we will notice that. Let me see if I can grab this wick. All right, we drop down, we're going to see that this is possibly some zones. Okay. And we do have, it's been mitigated. All right. That imbalance has been filled on the 1 hour as well. I'm just trying to see if we can get close to that 78.6%. See if the market really gives us a reason. Now we do have 1 hour imbalance with a 1 hour supply right here. It's a doji, so take the whole thing. It's a better discount at the 61.8%. That's been mitigated. So guys, I'm just going to look for entry around here. Stops just above this high. Okay. We got initial target there at the 0. If we get a full 100% retracement or extension, that would be our ultimate take profit there. We're gonna have to wait for market structure to be built out, but of course we'll take partial profit at the 0%. I would even say to look into taking partial profits in these areas. Mexican peso was not looking that wonderful. Partial profit. Partial profit. All right. That gap has been filled, so we'll take partial profit at the low. This gap has not been filled. I'm going to put this here just so you guys can see. All right, that gap has not been filled, so partial profit, partial profit, partial profit, partial profit, partial profit. I'm trying not to be lazy, guys, and just really point out the areas that I would be looking for partial profit. Partial profit. Do you want to take this many? It's up to you. Of course, the 61.8%, but now we got partial profit there. Partial profit here. I would take this many. Okay. Now you'll get to a point where you can't take any more, just because based off of the lot size that you enter the trade with. But maybe you can move, or what? One of the things that I do is move my stop loss into profit. Okay. Let's see what else. We've got this gap fill. Partial profit. Partial profit, and of course, ultimate take profit at 100%. All right, so potentially looking at a 49x on this one. Okay. Um, with some partial profits along the way. USD Mexican peso, again, institutional bias is consolidation. So we may see this pair consolidate, not necessarily to say that we're going to actually be able to jump in on this trade at these specific levels that have been marked out. But again, of course, guys, we wait for what? Confirmation. Okay. All right. Moving on to the NZD USD. And the institutional bias for this is a consolidation. So let's take a look at the 4-hour structure. Most recent leg, we have been here on a downtrend. We've had a low, okay. Kind of been on an uptrend, except for this high failed to be taken out, but this low has not been taken out yet. So we kind of ended things on a consolidation basis here on the NZD USD. However, I'm taking a look at this low here, as well as just this consolidation right here, this base drop has been respected. So I am going to say I'm going to be looking for shorts on this. I mean, right out of the gate, we do have, no, we don't. All right. We don't have imbalance. However, we do have this 4-hour supply right here that has not been mitigated. Okay. So we could see that. We could see this imbalance being filled that is also sitting in unmitigated supply. Okay. I do like that. And we do have imbalance here. All right, that the market could come up to fill. That's been mitigated, so it could play off of that imbalance. But again, I'm saying that I'm gonna be looking for shorts. But let me finish filling out the anatomy of this 4-hour. All right, so we have imbalance that needs to be filled. We do have a rally base zone, demand zone right here on the 4-hour. That hasn't been mitigated. So, and let's grab our fib. This high was not taken out, so I'm still thinking that it is bearish. All right. That's sitting at the 51, at the 50%. Imbalance fast to 78. We do have a pretty strong zone here, 4-hour supply that has not been mitigated. So I am going to be looking for, based on this strategy, you're going to be looking for something like this to play out just above those highs right there. And if we do our full field trading with 100% extension, possibly aim for down here, 31x trade on that one. Let's see. Still need structure to be filled out, but let's say if it shoots up, so we're going to take partials there, take partials on that gap fill, partials here, partials, get a lot of areas to secure here, partial, of course at the 0. Okay, course at 27%. Looks like we have a gap over here though. So let's see, partials there, partials there. We got this gap fill, which is at the 61%. So I will delete that. We do have this gap fill here. Jump on partials here. We do have the 100%, but I do like these looks. Gap fill there. All right, some partials there. All right, so into the USD. Based off of the current structure, I'm thinking that it's going to be bearish. Institutional bias is consolidation. These are the entry points. So wait on confirmation, and let's go from there. All right, we're going to be wrapping this up. All right, so now we're into Bitcoin here. Institutional bias is consolidation. We have been on this downtrend. We've had we've had that high been broken. That high been broken. This high has been broken. We had this low. So currently, let me see here before I throw that out there. Oops, too fast. That low. That low. All right, guys. So I'm going to be looking for shorts on Bitcoin. Yeah, we're expecting for it to consolidate. However, we may want to be looking to take shorts here. Imbalance. Imbalance. That's been mitigated. The zone's been mitigated. This one has not been mitigated. And we're sitting off of institutional demand here. So that has been mitigated. That high was broken. That high was broken. This low was broken. This low was broken. This low was broken. We are definitely going lower. At least, if not anything, we are definitely going lower to fill that gap and possibly bounce up off of this 4-hour demand right here. We have here and here. Just gotta look at the structure again, guys. Man, I really want to aim for sales, and I don't want to bring I don't want to bring another strategy into this, but I can definitely see this going lower. I can see us coming off of this order block right here, possibly. Bam. We do have a breaker right there. This got being filled. Yeah. Let's see here. So I know I just kind of just threw something in the mix there. You guys may not know about order blocks. You may know about order blocks. You may not know about breaker blocks. You may know about breaker blocks. But I'm looking at my reasons to take this lower. So I will be looking for sales. Possibly from this area right here. All right. And that is not necessarily an established low, but let's go with it. Most recent highs of high. Most recent lows of low. Drop over to our Fed trading. All right, we are sitting up at 78.6. If that is going to be our defined low, got the 78%. Could definitely possibly see it push up into this area right here, and maybe taking it down to here, or maybe at the 50% of this 4-hour demand. So institutional bias is consolidation on Bitcoin based on structure. I like how taking sales looks. So I kind of had to jump out of the rally-based supply and demand world, throw some order block trading in here, which I do have videos on that as well, in order to put in my trade idea. So gonna be looking for this 17x trade on Bitcoin. All right. Of course, guys, if you want to wait for Confluence and do your own analysis, please. All right. Take a look at gold. The bias on this is consolidation as well. Let's take a look at this 4-hour anatomy. Oh, nice little flag here. Big pop out. Looks like this market is getting ready to turn around. But let's see here. Yeah, we're sitting inside of institutional supply. Let's see, we've came out, we didn't tap it, we tapped into it. I think this market is going to go up eventually. We'll probably get a push down and get this consolidation going back and forth. So what I would do here, so our first touching, yeah, so I would probably wait for some buy opportunities on this one. Okay. And the reason why I'm saying that, just so you guys know, we're in this institutional zone, really like the first time in this institutional zone. So I'll be looking for a push out. We did have a strong push up here, this little pullback. All right, and now these candles aren't as strong. So more than likely it's going to drop out of this zone. And when it does that, I'll want to look for some areas in the market that this market will push up. See, if we come here, all right, if we look at this 4-hour institutional zone, excuse me, not 4-hour institutional zone, but 4-hour zone. You see where we came up and we've had a reaction there, which is also sitting on the 50% of the institutional zone. So I'm thinking that this market is going to pop out. Could fill this imbalance, all right, and pop back up. We have imbalance here. We have imbalance here. Okay. Any unmitigated 4 hours. This one has been mitigated. This one has not been mitigated. This one has been mitigated. Okay. So it's very possible, guys, we could catch our buys coming off of this zone. Okay. All right. Now let's see what type of retracement is that. All right. Most recent lows of low to that high. Switch over to the fib trading. Okay. We're talking 61.8. 78 is back here, but you know what? Let me see. Yeah, this zone's been mitigated. This zone has been mitigated as well. Yeah, so I'll be looking for confirmation around this area here, guys. Confirmation there. And maybe, because again, I think that this is going to push up. I think gold is going to go up here. That's our 100%. Okay. So we will have to wait for this to be filled, all right, to look at some partial profit opportunities in between our entry and 0% extension. So let's take a look here. All right, that's sitting at 0%. So partial profit, and I'm just gonna do the highs here, guys. I'm not gonna worry about the imbalance fills, partial profit. But you guys just know that you can zoom in and take a look at the imbalance, and just take a look at those fills for your partial profit opportunities. But we're gonna go there. Gonna go there. Gonna go there. Gonna go there. We're past 100%, but I'm just gonna go ahead and throw this out there since this is an institutional. It'll go there. All right. So gold. Institutional bias is consolidation. All right. However, taking a look at structure. Excuse me, I'm sorry guys, but taking a look at structure. Okay. I'm probably going to see this going up. These would be opportunities. This is opportunity that I'm looking for to take this market up. It's very possible that we could just get these gaps to be filled, the imbalance to be fulfilled by the market, and then it could push up off of that. But I like these zones. I like to try to take my trades off of zones. So looking at a 39x trade here on gold. Now let's take a look at silver. Okay, taking a look here at silver. Institutional bias is consolidation. Let's take a look at the market structure. Yeah, it's pretty much been consolidating. That high was taken out, so more than likely we will eventually see this market push up. Kind of got a nice little flag pattern here going on anyway, bearish flag pattern. Taking a look at most recent structure. Low, higher low, higher low, higher low, higher low. This high was taken out. So probably we'll be looking for buys as well on silver. Now let's see if we can find some areas. So we have imbalance there. We have any more imbalance? All right, no more imbalance on the downside right there. Not even there. Okay. Yeah. So all right. I'm not bored, guys. I'm just tired right now. Let's take a look for some unmitigated zones. All right. This zone has not been mitigated. Okay. This zone has not been mitigated. Okay. Let's see. We have an imbalance to be filled there. That has been mitigated. That has been mitigated. That has been mitigated. This one has not been mitigated. But I am liking the lower zones though. And of course, Fibonacci will say so as well. So I'm liking this zone. We do have imbalance that needs to be filled. This has not been mitigated. Let me take a look at this retracement that has taken place. Low to high. All right, so 78.6% right on the money. We take this low, our most recent lowest of low to our most recent highest of high. Yeah, I'm liking this. All right, so I am taking a look at confirmation in this area right here. Okay, put this just on the outside. All right, and possibly seeing a 100% extension on this. Okay, of course, partial profits at 0%. We can take partials here, partials here, partials here. How much bad we're doing now? I think we're good. Okay, partials there. Right. Partials at this high. Partials here. Partials here. And guys, I think what I'll do is in the description I will leave a link to these charts as well as my free market list for you guys as well. So hopefully that'll help. So let's see, partials here, and let's say one more. Could go there, and we could go here. It's for the imbalance field, and that's for the high. So on silver again, looking at a possible 13x, a little over 13x trade on this one. So we'll see how that plays out. Of course, waiting for confirmation. All right, now let's take a look at U.S. oil. U.S. oil bias is downtrend. Okay. We've had this low taken out, this low taken out, this low taken out. This low has yet to be taken out. I mean, on the current leg, it is a downtrend. However, it is also a bullish flag. Well, we can't really count it as a bullish flag because this low right here has been taken out. All right, so I'm thinking bearish with this pair as well, along with the institutional bias. Where could we take trades from? This has been mitigated. This has been mitigated. this has been mitigated. Okay. I don't see any 4-hour imbalance here. The institutional zone that it's in, let's see if we can even get to it. Did I pass it? No, I didn't pass it. I don't know if we're gonna have that 4-hour data. Yeah, I don't. Let me see, maybe it'll catch up, but I don't think I'm gonna have that 4-hour data. Okay. Let's see. I don't see where we could take. I don't see any 4-hour sell opportunities. So let's drop down to the 1 hour. Okay. We have imbalance here. Okay. It needs to be filled. This has been mitigated. Let's see. That's been mitigated. Alright, so we're probably gonna have to go smart money on this a little bit. Let's see. I really don't want to drop down to a lower time frame. Yeah, so even this as a order block has been mitigated. Doesn't mean that it won't come back up, but made. This may be going up. Here, let's drop down to the 30-minute. That's been mitigated as well. That's been mitigated. Yeah, the only evidence I see, or some areas for sell trades would be the imbalances, which you don't see footprint for imbalances as far as the market trading one way or the other. Your footprints are your supply and demand zones. Now, could we drop? We could possibly keep dropping down. We may just have to keep dropping down to see if there are any possible lower time frame entries, which I am a big fan of. But for the free market analysis, I really do try to keep things basic for you guys. Let's see. Yeah, even on the lower time frames, there's been mitigation. Let's take a look at this structure again. Well, technically, I know that the institutional bias is bearish, but that this high was taken out, this high was taken out, this high hasn't been taken out yet. However, this low has not been taken out, but this low was taken out here. This one candle took out two lows. This low was taken out here. So yeah, I'm still thinking bearish on this, but We just don't have any bearish areas of interest. Right now, I do see buy side imbalance. Oops. All right. I see buy side imbalance along with unmitigated demand zones on the 4 hour. So that's looking good. That's looking good. If we grab this is the leg really that we're on. Play with me. I mean, I was set right at 78.6%. Yeah, we don't have the areas of interest created yet for the sales. I know the institutional bias is a sell. So this is going to be inconclusive for me for right now, just because the 4 hour demands have been mitigated, 1 hour demands mitigated, 30-minute demands mitigated, 15-minute demands mitigated, 5-minute demands mitigated. I didn't take a look at the 1 minute. I mean, we can definitely see some areas here on the 1 minute, which it is U.S. oil. But do I want to take you guys down that far? I don't think I really want to take you guys down that far. But all right, just stroll with me for a little bit, okay? All right. So, I mean, we do have an imbalance, unmitigated 1 minute. We have, I have prices up here. Guys, it's been mitigated. Sorry. Let's go above price. Or at price. Let's see what we got. We do have this 1 minute along with the unmitigated. Supply. I do take trades off of the 1 minute. I typically don't do the forecast videos for you guys off of the 1 minute. But in this case, okay. And we are going to go from the most recent highest of high down to the most recent lowest of low. Switch this over to fib. Let's just see. Oh wow, that's small. That one's at the 50%. I wonder if we have anything up here at the 78.6. And I'm gonna say no. That's all been mitigated. This has not been mitigated and it's at the 50%. Institutional. So it's very possible we could see that play out. Depends on where they have their sell orders at. Let me see if that makes sense on the 4 hour. I think I'm up here. One thing that does make sense to me is because we're like right here, is maybe taking this here. And again, guys, just because I pull it out to the 100% does not mean it's gonna go all the way out to the 100% extension. But based on this, let's see what we're risking: 7 pips to gain over 1,000. If this forecast is right, I'm the king. Okay. So yeah, let's just go with that. And I still think that there may not be enough areas of interest that have been created up until this point to take it low, but we're gonna go with this, right? All right, so of course we'll take partial profit at 0, take partial profit at that low, take partial profit here. We've got a bunch of areas to take partial profit in here on US oil just to secure the bag. Okay. We've got this imbalance fulfillment, this imbalance fulfillment, that one, and this is past 100%, but we'll take that low. All right, so US oil, this plays out and we get our confirmations. We're looking at a 144x trade on this one. All right, now last but not least, let's take a look at our S&P 500 index. All right. Ooh. And let's see here. Institutional bias is consolidation. The S&P 500 has been on a downpour, if you will. Has not bottomed out just yet. We did see a bounce off of this institutional demand here. We do have institutional demand down here, as well as like 4-hour imbalance. All right, so let's take a look. I mean, fundamentally speaking, I'm still thinking that we're in a bearish market, but let's take a look at structure. Okay, all right, low broken, low broken, low broken, low broken, high broken, high broken. This high was not broken, even gave us a double top. This low was broken, this low was broken, this low was broken. I'm looking for sales, guys. I'm looking for sales. I'm looking for sales. I'm looking for sales. All right, let's take a look. Let's fill out this anatomy. We got imbalance there. Any more imbalance? I mean, we've got it up here that they could possibly bring it back and fill these in, which are sitting right on the edge of 4-hour supply. So, I mean, technically, it's not crazy ideas. But what I would want to do, let's see, that's a doji, that's been mitigated. That's been mitigated. That one's been mitigated. This one has not been mitigated. We got imbalance up here. We may see this 4-hour. Yes, that has not been mitigated. We may see this 4-hour supply be ran through in order to fill that gap there. Trying to see where can we take sales from, or look for sales from rather. No. I mean, it's very possible it could come up there because that could be a lower. That could be a 1-hour zone up here that's not hasn't been mitigated. Yeah, this is a 1-hour zone that hasn't been mitigated. This is a 1-hour zone that hasn't been mitigated as well. Let me see. I think this one may already be on its extension run. Yeah, at the 50%. Yeah, this one is already on its extension run. So I'm thinking we'll probably see, we may see this pull back into this 1 hour here. That's been mitigated. We may see a pullback in this 1 hour. Let's see, that one has not been mitigated. All right. So I'm actually thinking pull back into this 1 hour. Very possible. Okay. I'm sorry, guys. Give me 1 second. Just taking a look here. If we do that, see, that's already been played into. That's already been played into. Let's see, we have that 1 hour open. So they may do here. I would say do this, because what they're probably going to do with this imbalance is not fill it completely. Maybe just do a 50% fill. So we'll put. I'm going to put the stop here, but technically, like if you were just trading imbalance, you're going to want your stop to be above the candle that initiated the imbalance. All right. However, that is a pretty steep. It's a pretty steep stop loss. even if we, I mean, if you, yes, if you stretched it out to the possible 100% extension, it's a 5x trade. I don't want to say that, so I will wait for my confirmation. Put my stops here. All right. Wait for my confirmation. All right. It's already on its 4-hour extension run. All right. So that's going to put this trade at a 19x, almost 20x. All right. So I would be looking to take this down, which is still not bad because we're sitting in the 50% of this institutional demand where we could very possibly see the S&P 500 rally up from. And, you know, never mind. I'm not going to get into the long-term trading, but we can definitely possibly see it rally up from this institutional demand or this institutional demand. Maybe this one. What is this? February, March is coming up. The Feds usually pump money into the market around March, so I can definitely see this trade playing out, and then maybe it bottoming out, the S&P 500 bottoming out here and starting to go up. So anyway, hope you guys have dry powder ready for that. If you are dollar cost averaging, maybe hold on to your money, the amount of money that you have set aside for the dollar cost averaging, and maybe just throw a little hint out there or a suggestion, maybe wait to dollar cost average when you get into this zone. But anyway, for my Forex traders, this is the play for the S&P 500 that I'm going to be looking for, this 19x trade. All right, guys, and so that is going to do it for me on this free Forex market forecast. I know this was long. I hope this has been helpful to you all. If so, please consider liking the video, subscribing if you're not a subscriber, and comment below. Let me know, did you like the video? Didn't you like the video? Did you agree with my analysis? Did you agree with the anatomy breakdown that I did? All right, and again, guys, this is just a forecast. All right, it's just like the rain. Meteorologists, they give us a forecast, 50% chance of rain, 50% chance of no rain. Same thing with Forex. Forecast analysis, 50-50. And it may not play out exactly this way, but that's why we wait on our confluences. All right, guys. In an upcoming video, I'm going to show you guys exactly how to do your own Forex analysis so you don't have to wait for anyone else to show you. All right, so I'm going to teach you how to do the institutional biases, and you've already seen the other things where I check on the 4-hour structure as well as the imbalances and supply and demand zones, or the rally base supply and demand zones. But other than that, guys, that's going to be it for me. I hope you enjoyed the video. Always remember, if you stay in God, you will stay in control. And until next time, guys, happy pip fishing. All right, I'm going to go get me some rest. You guys have a good one. Enjoy your family. Enjoy yourselves. And let's get ready for this trading week. All right, bye-bye.